So you want to learn a super simple scalping strategy where we use the Fibonacci Retracement tool to find great, fast-paced entries in and out of the market? Well, that's great then, because that's what we're going to show you today. Okay, so the real question that we're going to be taking a look at today is what is the Fibonacci retracement and how can it help us scalp when we're in the markets? Okay, and to do that, I'm going to break this video down into 3 parts. Okay, so we're going to take a look at what Fibonacci actually is and how does it work in the real world. We're going to take a look at why it is the ideal tool for us when trading, and then we're going to describe the scalping strategy in full. But before we do that, if you could just like, subscribe and ring that notification bell, we're going to be bringing out some great content over the next few weeks and you won't want to miss it. So the first question you're going to have is, what is Fibonacci? And that's a good question because we don't want to just blindly follow something we don't understand. So the Fibonacci sequence is a series of numbers in which each number is the sum of the 2 that precede it. And it looks a little bit like this. Now you might have seen this before. This shape is also commonly referred to as the golden ratio, and it just so happens that we've managed to see it every day in our lives. From shells to trees, hurricanes, and even galaxies. But I know what you're thinking. How the hell does this help me trade? Well, that's what we're going to talk about right now in part 2. So in part 2 we wanted to discuss why is the Fibonacci retracement tool ideal for trading. Now when we see a push like this, it's the perfect time to pull out our retracement tool and put it on the charts. Now we'll look at different levels and how the retracement tool works exactly later on, but at the minute we just want to look at this level here, which is the 50 level. This means that if price retraces to this level, we're half of what the initial push was. Now trading in a way is self-prophesizing, meaning that if enough people believe something, then it will happen. If enough people are looking at this level right here, and when price comes back to it they all decide to buy at the same time, then it looks like price has bounced off the Fibonacci level, when actually it's just a lot of people getting together at the same time to buy from there. So we're going to move on to talk about the strategy that we're going to use, but before we get there, if I could just ask you to consider going across and checking out our Patreon channel. Within there we have daily signals and chart updates that I'm sure you'll find really interesting, and I'll put our 2022 results so far below. And if you join now, we're having a special offer as a celebration for us being back on YouTube, but it's only for the first 100 people, so make sure you get there as soon as possible. So now we're going to take a look at the strategy, and what you can see in front of you is TRADINGVIEW.com, which is the charting package that I like to use when I'm live trading or even back testing. If you haven't checked it out, you really should. It's got a free version, so I'll leave a link in the description for you to go and check that out. So this strategy has several steps involved to make sure that we give ourselves the best opportunity possible to scalp some great profits out of this market. So just to start with, we're on the 5-minute chart. This can be used on any time frame really, but because we're scalping, the 5-minute chart is ideal to give us as many opportunities as possible of getting into the market. So the first step of this strategy is we want to see a nice, long, clean push in the market, showing us that momentum has chosen a way that it wants to move, and we're looking to get on board with that. So if we just run this through now, we can see none of this is clean. And then we get a pop-up that starts moving impulsively out. That's a really nice drive, and that's exactly what we're looking for. So now we want to see a retrace of this move, which we get straight away there. Okay, so now we've had a retrace. The second step is we want to go across here to our Fib retracement tool and put it onto the charts. So we'll click on it, and we want to be looking at the lowest point of the move, which is down here. I like to use wicks. You don't have to, it's personal preference, but I think it works great. Drag it up, highest point, top of this wick here, and we'll put it onto the charts. So now we have our fib retracement tool in place, and as you can see, I only use 2 levels when trading this strategy, and that's the 382 and the 618. So now what we're looking for, the third step, is we're looking for a touch of one of these 2 levels and a rejection. So if we just run this through, price has come down. Now we've got a touch. It's not really rejected, so that's not enough for me to want to enter this trade. We push through it again, and now it is. So that is what I would consider a rejection, and now I would be looking to enter a buy order. So if I set this up here now, we'll be in there. Now your stop loss is going to want to go below the low of the move that rejected. How far, again, depends on personal preference. And then our take profit is very much dependent on how much risk you like to take. Because we're scalping, some people like to put it up here, the high of the move, which would give you a 2.2 risk reward roughly. But I like to use just a nice simple 1 to 1.3 risk reward. I think that gives us the best chance of being in and out. Look, we're only scalping. We're not looking for big moves. We're just looking to get in and out of the market. So if we play this through, we get a bit of a pullback, and then we push nicely through our take profit. And actually, if you had had that up at the high, you would have also won. Okay, so let's take a look at a bit of a different example now. We'll take a look at a short trade, and we'll see what happens when it pulls back a little bit further. So remember the steps. The first step we're looking for is a nice clean drive in one direction. Okay, it looks like we've got this here. So now we're just waiting for a pullback, which we get there. Okay, so now we've had a retracement. We can come over again, grab our retracement tool. I'm looking for the highest wick up here, and we drag it down to the lowest, and there we're set up. So now we're looking for a touch and rejection of one of these lines. So as it pulls back, we see, okay, so price completely ignored that first line at 382. So now we want to see if we can get a rejection off the 618. If not, we just sit steady, we don't enter a trade, and that's fine too. So it looks like we've maybe just about touched there, but again, that's not enough of a rejection for me to want to consider this. Okay, so the next candle, we've had a nice touch, and we've closed in the lower half of the candle. I'm quite happy to take a risk on this now. So we get out, we'll take a short order, we place it as soon as the candle closes, and again, our stop is going just below where the candle rejected. And again, you can either aim for a full one if you want to take, if you're looking for big profits. But again, I just like to use that roughly 1 to 1.3 risk reward ratio. And then we'll just see how it plays out. As you can see, we got very close. We might have just made that, and then we go straight through. And actually, yeah, again, you would have taken full profit if you'd have aimed for that further target. Now, for obvious reasons, I don't only want to show you winners, so let's have a quick look at a loser here. So again, step 1, we're looking for a nice drive, which we've got there. Now we're looking for a retrace on this. Brilliant, we've got that. So now it's time to place our tool on, find the highest point to the lowest, roughly there. And then we're looking for a touch and rejection of one of the 2 lines. So as it pulls back here, we get a nice touch, it's pushed through, and then it's pulled back. I'm happy to take that, that's a really nice rejection. So I'll enter a short position. My stop goes just below where we rejected, and then I want my 1 to 1.3 risk, roughly. And then we just see how it plays out. And as you can see, it's just come straight back up and taking us out. Now, those trades happen. This is trading. You can't expect to win all of the time, and you have to be prepared to take those losses when they come. Okay, so that's everything. Thanks so much for joining us, and don't forget to like, subscribe and ring that notification bell as we start to bring out plenty more content, and check out patreon.com/frameworkfx for our signal site and some other really great stuff. We hope you've learned something, and we'll catch you soon.